Welcome back to Primary Source China Investment. We're on show T3, and this week we're going to take the perspective of a mainland investor because, the CSI 300 or Shanghai Composite Index or Shenzhen Composite, all are down about 20% year to date. And if you're a mainland investor, what are you looking at? There's been a lot of bad headlines. COVID continues to be locked down. Growth has been stifled, property, real estate. So what are the investment classes? What are those looking like going forward? So where are we now and where do we want to be? So I think first up is you look at the equity market. And we've been talking a lot about this dual listing, some of these US listed Chinese companies relisting or dual listing back in Hong Kong. You might think that mainland investors would be lapping up these shares through the Stock Connect. But in fact, Hong Kong investors are buying more mainland stocks than mainlanders are buying Hong Kong stocks. So, and that ratio is like 5-to-1. So a lot more money is flowing onto the mainland than into Hong Kong. For those not familiar, there are two major exchanges on the mainland, including Shanghai with a market cap of 47 trillion renminbi or about 6.8 trillion US dollar. And that currently trades at about a 13 PE. The second is Shenzhen with about 33.7 trillion in market cap or about 4.88 trillion US dollar. And that trades at a much higher PE of about 24.5. Both the composite indexes are down year to date, with Shanghai down 12.28 and Shenzhen down about 15.87. The CSI 300 is down about 18%. So everything is down. Peng.guo, any thoughts about that?
Investors' perspective right now, they don't want to buy anything.
Right.
They have to deal with the difficulties in the life, in the business, in the job, whatever things. I heard my friends, they work in the big branch in the bank. The whole bank, they work for almost half a year. They almost cannot sell out of the fund or financial product outside to their consumers. Yeah, pretty much everybody get conservative right now. So, but from the previous, if China high net worth individual, they might have a lot of options. I think they might want to invest in pre-IPO equity investments, so they can get connected and get IPO, they get a bigger return. But since get huge change since last year, obviously this strategy suffer a huge loss.
So let's get into that. So first, they don't want to buy anything. So what do? You keep your money in cash. The reality is you keep your money in cash on the mainland. Deposit rates is 1.5, reverse repo rate is 2%, and the 10-year sits at 265. So this is really down from what investors are expecting. So their expected return versus the reality. If you look at a garden variety 5-year treasury, you look at a garden variety fixed income fund, corporate bond fund on the mainland, they've all been up year to date, which is great, but these are not the returns that investors are expecting. And that's why they're rushing to these other asset classes, right?
Yeah, I think initially in the first quarter, the stock market get a significant drop. So a lot of the people have some incentive to buy the stock because they want to better the bounce back quickly. So that means a lot of the investors to invest in the equity market. But unfortunately, the second quarter looks really bad. They get volatilities in the market. Obviously, they suffer the loss. I think a lot of guys right now, they are more wanted the secure return and cut the loss.
So sentiment is bad.
That's right. Yeah, they have no incentive to buy all the financial products right now.
Yeah, the other thing you mentioned is pre-IPO. So, the private venture equity space has really grown a lot in China in the last, whatever. You can look, 2 years, 5 years, 10 years. There's been huge growth, but there is signs that the first half of the year was pretty bad, raised just under 5 billion US equivalent. In 2022, they're probably going to raise less than half of what they raised in 2021, which was almost 30 billion. Despite the huge push for ESG, there's been a lot of calls for carbon neutrality by 2060 and mandated that by 2023, all new cars must be fully electric or hybrids. So there's a huge push and a lot of money's chased into that. thereby bidding up the valuations of these entities. So people are now looking at PE and venture as being very rich and hoping that there's a pop in the IPOs.
Yeah. The reason is a lot of things get fundamentally changed. So whatever the experience or the investment ways they followed is not working anymore. They use like the VC and the PE. They use like the internet business.
Yeah.
So they know how to do that very well. They also be very successful with multiple like Alibaba, Tencent with that. But unfortunately, right now they try to get into they call the hard technology, which is they don't understand. Unfortunately, the business model, the cash flow is significantly different from the internet business. So that they also get a lot of the change right now.
Yeah, because you have a physical plant when you want to invest in the hard technology. And speaking of building, we'd be remiss if we didn't talk about property. So recall that for most mainland investors, their largest investment is their home. So 70% of household wealth is stored in their home. The calculus has changed in terms of real estate because previously people would just buy real estate because it was a return that was locked in. There was never really any real downturns over any period of time. And now we're seeing people are genuinely looking at real estate and saying, well, even if you're giving me cheap money and PBOC's cut rates, even if you're giving me cheap money, I don't know if I want to buy more real estate.
Yeah, real estate is also in a very dilemma situations.
Yeah.
And the final result would be the liquidity gets significantly dropped. So this market also, this is the number one business in China.
Yeah.
I think right now the government really worry about the bank. So because after the real estate is the bank industry. So as long as they try to keep stable with the bank industry and not get a significant impact by the real estate.
Yeah, we talked about it last week. You know, even if banks want to lend, there's really no demand from the individual at the real estate level and from the corporations. There's very little demand for money, even if it's cheap money. So you have banks that make money by lending. They're not able to lend, even though from top down, Beijing has said, listen, go out and lend, and you can cut rates to go do that. If you have no demand for money, you're not going to be able to put these big money to use, and those are large institutions, and those large institutions are not going to make the kind of profits that they've made historically. So there's this chicken and egg and compounding effect of all of this policy, but it's a demand driven, and if there's no demand, it's going to be hard to spur that demand.
Yeah. But I think like the political decisions, they can still do something if they want to cooperate together and work through this hard situation. That probably they can give the hope to the market.
Yeah, there's no doubt there's a lot of headwinds on the ground for mainland investors, and I think what you said at the top of the show was, look, a lot of mainland investors just put their hands in their pocket and they're going to wait. There's really no impetus to do anything, and sentiment is generally negative right now. That's the reality.
Yeah, but don't forget that all the mainland investors, as long as you have the 3 days positive big return,
that will change.
They will change your mind
very
overnight.
Very quickly. So we're going to be on the lookout for that. So we're going to leave it there this week with show T3. Thanks for tuning in. Make sure to hit the subscribe button. We'll see you next week.
Thank you.